tonight. Nice to see you guys in here. Appreciate it. All right, let's get started. So, typical disclaimer. CFTC Rule 4.41. Do not use money you cannot afford to lose. My job is to help you avoid those problems and to help you make the right decisions in your trading. All right, let's get started. We are right in the middle of quarter two. You know, I love this part. Let's grab this pen and mark this thing up. So, gone, right? We're here, past, here. This is dead center right here, the 18th. Okay, so you have as much time in front of you as you have behind you. You're right in the middle, so we're sitting here. Okay, so where you at? What's going on with you? You know, I always got to ask. Are you working on something? Are you developing a plan? Are you trying to get qualified? Are you building your own personal account? Still planning, debating? Are you demoing yet? Are you doing your 30 trade assessment? Are you trying plugging in the spreadsheet? Do you have your plan worked out? Just be doing, man. Just do something. Send it to me. I get some stuff in, but it's nowhere near enough. There's just a faithful handful of people. I guess they realize I'm not going to bite, and they mail me some stuff in. And that's okay, but I really would love to hear from everybody. So figure it out, man. Let me know. Send me something. Plan something. Do something. Show me how you're doing on your qualification. If you passed your phase one, send me the paperwork, man. I love that shit. All right? If you haven't developed something yet and you're still kicking around, you're relatively new, we use the 12-week year. There's a book called The Field Guide. It just basically gives you a framework to lay out the next 12 weeks of your life. Okay, if you're starting here, right, you count 12 weeks from Monday if you're starting, right, and you just label it out, right? So there's 4 weeks sitting right here, 2 weeks here, that's 6, halfway there, July and part of August, and that'll give you a 12-week cycle, right? It's never too late to start over. If you blew it here, and you're sitting right here, then reset and start here on Monday or Sunday night for yourself. I don't care if you've been with me 5 minutes or 5 years. Start over right now. Reset, get your shit together, and get moving. Just do something, all right? You have to do something. That's the bottom line. All right. I want to make sure, let's see. I want to make sure my screen is showing clearly. Let me open up the dashboard here. All right. You guys should be able to see my screen clearly, no issues. Looks like you can. Okay. All right. Moving forward. Pop quiz. Someone sent this in to me, and I don't know. You tell me. I'll go through it. I'll give you about 30, 40 seconds. You ready? Go. All right. If you're pretty quick at this, you should have a handle on it. A couple more seconds. Mark it up. All right. So this is an older chart. I could tell by the snowflakes it was around Christmas or winter when I used this slide, so I couldn't even tell you when I did it. It's irrelevant. The TDI is the TDI. Nothing's changed. So I think the drill was to go through and mark every signal that was available. But this is a good signal. There's nothing wrong with the signal, right? Shark fin, blood in the water. Okay, but if you go through the entire one, that's a signal. That's a signal, right? So this might be a sell signal here, and this would be an AI add-in, right? Add a unit. Okay, the same thing, shark fin, blood in the water, right? You get the bounce, there's the cross, add in here, right? 1, 2, 3, probably an exit, right? So you got to sell here from band to band, water to water. Okay, so when you're using the TDI, the counter trend move usually doesn't come back that far. right? So what happens is you get your long signal, you get a pullback, you get an M, right? This, let's just say for argument's sake, level 1, level 2 pullback. The signal's still waving higher. The bands are heading up. The market baseline is tilted up. Everything is showing uptrend, right? So then you get this peak out. This would be your shark fin blood in the water. The exit signal the opposite, but price turns up. So you have to figure you got a spike to the high and higher price here because this is not divergent, although price could have been divergent. And the TDI gave you higher closes, that's still an indication of higher price. So if you're going water to water, you're here. This is the exit. He has the hindsight of seeing that signal and marking it. That's incorrect. This would have been the actual exit here. But if he had some divergency or something else going on in actual price, then he should have held for the next peak outside the band. But understand there's pullback in here and stuff going on. And this is, it's hard. It's easy. Hindsight's easy in the session. You don't know what part of the session he's in, where this label came from. And I honestly don't remember. It was years ago. So if you're marking this thing up, the way to do it is to go every signal available across the way and then see how it actually plays out in price. There's a drill that I'd love for you guys to do is you take everything off your chart and you just open this window up about that size on your screen and you just trade it without looking at price. It doesn't matter. So what you do is here, let me erase the screen, show you real quick. This is a pretty good drill to learn the TDI. I did it years ago. It's amazing. So all you do is you open this thing up. You don't look at price. You take a short here, exit and go long, add in if you want, exit here, take a long here, right? Hold it on a squeeze back there, exit here. Maybe get back in on a cross here, exit here, sell, add in, exit. That's it. That's the drill. So what you do is you close out each position when you're supposed to and you exit out, and then you don't look at the ledger, just look at putting lots on and looking at the TDI and see how you do. You're gonna be thankful for candlesticks when you're done, but it's gonna give you a good feeling for what's going on. Some people do it and they win crazy, and I don't know if they just catch a trending day, but in a chop day when the TDI gives signals, it's tough. So that's why you trade the extremes. You guys may or may not remember, it's been around for a while, but probably maybe 6-7 years ago now, is we had some people in the group and we all got together and everyone took one instrument and the TDI and went back and just took the extreme buys and sells, and it issued pretty good signals on the extremes. They were almost certain reversals, and that's not, I'm just talking clean signals at the extremes, right? And those signals were above the levels and below the levels here. And it was the 1 hour chart and the 15-minute chart, and both of them held pretty true. So if you add price action into these and you get some kind of formation where you get a big vector to the high outside and the TDI, like let's say this would have been a long here, the candles might have looked like a vector candle when this was shark finning and then rolled over, and you took either the signal here or the hook back into the water, and that would have gave you a pretty good entry, and then you just held the trade. I know there's a couple guys in the group trading TDI, and they're posting their testing and stuff. It's a pretty great indicator, and I know you turn the signals on, the pro version, and it'll give you some directional bias and some actual entry signals. So I'm not telling you to base your trading on the TDI only, but it's a really good drill to get a feel for it and to see how powerful a tool it really is, and that's something you can do. All right, hopefully you guys figured it out and you did okay. Let's move along. Okay, so homework stuff, an email that came in. This was a trading plan that I just received about a week or two ago. I've been wanting to get to it, and the guy doesn't mind me sharing it, but at the same time, I don't mention any names. I never do that. You guys know that about me. This is pretty good. So he has his little check down sheet marked out, and this is something that if you don't have it, take a picture of it and adjust it for yourself. All right, so he's looking at his harmonics on 1 hour and 4 hour, his pairs, right? He's looking for his anchor, right? What's an anchor? Blue tracer, blueberry, mayonnaise, 5200 cross, some way to know that price is leaning on something and going away from it. right? That's simple definition of an anchor. Where's price leaning? I'm trying to check these things off on here for you. Okay, can't find the cursor. It vanished on me. All right, anyway. Traps. What's a trap? Right? A pin through, blue tracer, quarter points, Asian high-low, right? An AR trade. That would be your trap areas, right? If you're expecting a straightaway, your trap area, you might get a spike down outside vector into the low of the Asian range, pull through, retest on the 50 level, and then come out of there straight away, right? Out of the band, inside the band, patterns, TDI, that kind of stuff, right? OBIB could be outside bar, inside bar, same type of thing. You get a big vector low, and then the bars trade off the low inside the shadow of the previous bar. That's a trap. It's a trap pattern. Bounces, market baseline, reload, all the stuff on the TDI I just showed you, went through, that kind of stuff. Confirmation, where are you at, right? RSI, same stuff. All right, next part of it. Okay, this is tough. Okay, so we have his office hours, trading session, signature trade, his schedule. This is a clearly well done, thought out plan, and this is what I hope for you guys. So his office hours are from 0800 to 1300 GMT time. His trading session is London. He's looking for H4 harmonics, the stuff we just looked at on his check down sheet. He's a fan of the 50-50 bounce trades, right? They're decent trades. 15-minute, 1 hour, the stuff he's looking for. His schedule, arrives at the office at 0800, starts his pre-market, scans through the news of the day, make sure there's no red news on the board or affecting the pairs that he likes to trade. That's the stuff that's important. Okay, what after that? Setups will be filtered down to a maximum of 3 to 5 across all pairs. Okay, that helps control risk. He's waiting for his Mona Lisa type setup, whatever that is. Okay, if the perfect 50-50 bounce is a double tap into the 50 EMA, then that's his trade. He's looking for about 8 to 10% a week, risking 2% per position. All good stuff, man. Counter trend trades, he sets at 1 risk to reward or 1R, and trend trades, he's looking for 2R. That's it. Simple. His daily walkaway threshold is 4%, which is 2 of his stop outs. If he gets stopped out 2 times, then he's out. And if he gets stopped out back to back, then he takes the 4% loss for the day and he's got to push away. Everyone in this group has to have a push away amount, whatever that is. All right. If you don't know what it is, you need to come up with one. Trying to get this mouse thing squared away while I'm talking to you guys. Really sorry. I don't know if it died right in the middle of the class. I really don't even understand what happened. I'm showing battery, just can't find the cursor. It vanished on me. All right, so H4 harmonics to H1 patterns, waiting for the 4-hour harmonic alert, look for the H1, TDI, advanced MRW, 13 AMA above or below. Typical stuff, but it's a good rule set. Take pictures of this thing if you don't have it, if you don't have a good set made up for yourself yet. It's important. All right, what else? Trade management, position will be entered approximately at appropriate pullback levels. Once price shifts through 75% of take profit, close pending. Once price shifts greater than 75% of 1 risk to reward, stop loss to break even. He's got his stuff in there, man. He's handling it. Final notes, trades are selective. BTM blueprint detailed, and he went through some more stuff. Take a picture of it. He's kind of talking about his activity, what he does. Waiting for the action. At this point, I have an idea what setups I'm expecting, right? That's trade's about to happen. That's anybody could do that. What you do is you drill through your pairs, you find stuff in the position that may set up, and you just close everything else out. You don't watch 15 pairs when you're looking for 3 trades on 3 pairs that are setting up. Just close all that shit off your screen. Stop being distracted. You have a directional bias, right? I talked about this. You need to know where it's going. You have a directional bias. I showed you how to check something down. You check down whatever number of pairs you're trading. Less is more in this business. I've been saying it, but I want to make sure I say it again. Less is more. Make sure you're using less. Okay, so when you go through and you figure out if you're looking at 4 pair, you should drill it down to 1 or 2. Close the other 2 and get your directional bias. I don't care if you put a sticky note on your forehead with an arrow on it or on your screen. Down. Draw a down arrow and stick it on one screen. And if the other one's long, then you put an up arrow and stick it on the other screen. I talked about this. I do it. I still do it. I have a whiteboard and I get a rough idea. If I know there's an anchor in an EU short, then I just put a down arrow on my whiteboard. So I don't get myself confused and think like, oh, let me go long here. This looks like a long. How many fake W's are you going to see in the process of trying to find a short side? Don't fall for the crap the dealers throw at you. That comes from having a plan. All right, so once all the basic requirements are met for a setup, I will consider additional confirmation to see the strength of the setup. 1 hour, second leg, all that stuff we've been talking about forever. But this is the stuff, this is where the rubber meets the road. If you're struggling, I guarantee you haven't written down a plan. If you're struggling, I guarantee you got too many pairs on the board. If you're struggling, you're looking at too much crap. If you're struggling, you're probably playing on social media when you're supposed to be trading. You're not being consistent. You're not showing up at the office the same time every day. You're not treating it like a business or a job. If somebody tells you to be at the office at 9 o'clock and that's your job, you'll be there at 8:55. Show up and make it to your desk and you'll be there. And if he tells you to go to lunch at 12 and come back at 1, you'll do it. If he tells you to take a smoke break at 3 o'clock, you'll do it and you'll leave at 5. But if I'm telling you to do this shit for your own business, to build your business and to be better at trading, you won't do it. You won't even write me a piece of paper and tell me you're doing it. So I know you ain't doing it. When I get shit like this, I get excited because I know there's people out there that are getting it. We have a lot of people qualifying, but there's still a lot of you. I don't know if you're silently suffering or you just don't want to talk to me or whatever it is, but listen, I'm here for you. Send me something. Send me something that resembles this, looks like this. Send me something that will help you get to the next level or take the next step. I'm not going to shred you, I promise. A lot of you are embarrassed to send me the stuff because you know you're not following rules or for whatever reason, you don't want me to see it. Man, I've seen pretty much every iteration of this stuff over the years. You wouldn't even believe it. I mean, there's literally been thousands of people through this course, man. I've been teaching 12 years. So there's been a lot of people. I've seen a lot of iterations of these trading plans, man. There's nothing you could show me that'll freak me out, I promise. All right, send me something. Look, weekly target 8 to 10%. That's pretty good. 8 times 4, 32, 32%. Using the spreadsheet compounded, that's big money, man. And if you qualify for a couple $100,000 on an account and you're doing those numbers, you're done. Send me my Yacht Master. All right, let's get right into charting, my favorite. This, I got to get the mouse figured out. I don't know. My mouse is showing a lie, but I have no cursor. So I don't know, man. Let me try to. All right, I don't know how I'm going to write on these charts tonight. This might be a bust. All right, so anyway, listen. Here we go. Okay, pop quiz. Mark this up for me. I got to have a pen. Give me a second. All right, I don't know how it came back, but it's back. Let me back up a little bit. We were right here. Okay, all right. Pop quiz. Right here. Okay, walk through this with me. Let's walk all the way over here. Walk through this with me. I'm not going to tie you up with pop quizzes right now. We'll do it. Okay, what do you got? Okay, you got pressing. You got a directional bias. Well, how do you get a directional bias, Steve? Price pierced through the moving average, bounced, and continued down, right? It turned. This is your box area. Okay, anchor high, box, breakout to the downside. Now what? Okay, we're looking for a couple of pushes into a drop, maybe like a 1, 2, 3 push. Price tries to get higher, dealer smashes it down. That's your first rejection that you're going to use as your refined entry. Okay? This is not an entry. That's a failure swing, failed buy side auction. You want to see that. This closes below here. That tells me the book is still sell side. Price spikes right into the box, takes you in. Stop is here. You're on the gate, right? There it goes. Boom. Consolidation. Boom. That should be enough for you, you greedy bastards. Get out. Okay, now this happens to be his low of the day. So he shorted here. He's mid-session. His low of the day formed. Same thing. Same exact thing. What do you got? You got outside bar, right? This is on a higher time frame. This is an outside bar. So there's his vector candle to the low, trading inside the level, right? Notice how they start spacing it out. This is your rejection here. This gets stretched out into time, right? You refine your entry. He has this marked as 1. It's not deep enough, okay? It's touching the apex of this, but we all know that this area right here is the real apex, okay? Price goes in. It's easy to say that, oh, I got in here, but that's bullshit. I'm hot here because I take the refined entry 1, 2. Sometimes they give you a 3, and it happens. I'll either, if this moves far enough and pulls my stop, I get scratched. But usually I expect this quick impulse right here out of this level, and it rockets out of there and takes out the level. Then this confirms that that's clean, and then you're going to get a pullback again. But the pullback should stay. This pullback should stay off of here. But if I don't get an LOD trade here, then I'm going to get this trade in here, and my area is going to be right here. All right, I'm going to use the refine the entry, and I'm going to take 1, 2, and this will be a minor pullback, and then it arches over. That confirms. As soon as this piece takes out this and throws that, I'm good. As soon as this piece takes out this piece and vectors out, I'm good. Stop here. As soon as, look, there it is again, baby W. Vectors out, I'm good. Stop here. This vector's here. Look, head and shoulders, a micro head and shoulders. Shoulder, head, you guys can see it, right? Shoulder, right there. 1, 2, 3. Okay, comes out of there. This validates this, confirms it. Stop is here. Into the high. There you go. If you didn't target the water as your exit, you got another 1, 2 pattern right here. You're still good. As soon as this breaks above, stop goes here. And if you didn't TP here or here, you're going to get taken out on a pullback on your stop right there. And that's it. It's pretty great stuff, right? He was counting, looking for another reversal. He took one sell side over here. But look, here you are. This is the head, the high, right? Comes back, hits a rough level. This is, you're looking at a shoulder, head, shoulder, right? So head and shoulders, flips the book. As soon as this area closes below these pins and takes it out, that's your level, right? There's a sell side in there, but it hits here and bounces. We know that the major trend is high unless it's a chop day. So I would have been happy with just this move, but he kept fishing and he might have got himself something over here, right? I want you to realize this is a 1 minute chart, so it's a little tighter, but it's all relative, man. This looks like the 1 hour, looks like the 15 minutes, looks like the 5 minutes, all the same. These patterns are the same. You just have to understand where you are. Okay, if he's looking at higher time frame averages, I don't see the Mayo one here in the picture at all, so I don't know which way it's going. If the mayonnaise is pointing down, then he's right to go sell side. He's right to go sell side here at the session open and then here, and he's okay to take the reversal back to this level. Then this sell side, right, pulls back to here. This could be just a big, huge M formation on another time frame. It's all, you got to keep track of where you are, man. That's the bottom line. Okay, and if you look at some other stuff, I mentioned TDI tonight. Look, this is going higher. This is level. That's a divergent signal. That helps confirm. And then there's your market baseline. Little micro W on here with the signal line, and that confirms with another entry for long. And then you're good. Then if you notice in here, you got shark fin inside the band, outside the band. Right there, shark fin, blood in the water, and that kind of lines up right here. Right there. It's straight up here. So there you go. And then you got You got your last piece right here, divergent down, price is waving higher. That would be the exit, right? Because it ducks below the signal line, market baseline, it ducks right mid band, and then divergency, and the price does turn over. And you had a nice run in there. There's 3 pushes in there, everything you need. It's all there. All right, hopefully you got that. Okay. Same thing. Walk me through, man. Okay, he's got his book flip. All right, I'm having mouse troubles today, big time. All right, you got your book flip. Walk me through. I don't know how I got it last time. Let me see. Probably need glasses. All right, here we go. All right, I'm going to highlight. It's bigger. Okay, so he's looking for his book flip, right? Where does he get it? He's got his anchor to the low right here, right? It's divergent, right? This wave's lower. This wave's higher. Price breaks above the level right here, pulls back. He's getting in here. I like the arch. I like to get in off the lows, right? So I would refine the entry on these pins right here, and I'd go buy limit order here, aggregate it in there, or just straight. Those pins are very tight. May or may not get filled if I'm in these wick areas. And there's a straight run right there. There's a tracer. That's a target. Tracer and a moving average is a target, or target the water. You don't get it, you'd scratch out in here somewhere with maybe 25 pips or so. Okay, so trade management, you get in, you got a second leg, you got a retest off the Apex Nadery thing. Take your trade, targeting the blue tracer in the ketchup or holding for water. You get that flat sideways print, you got to take somewhere in here, right? When you get this, maybe back towards the high. If you didn't panic and get out here, right? But I like to choke the stop. This one that doesn't give you much to choke off of, right? You get these little sideways bars. You don't get a good area to choke. Maybe you look at a higher time frame for that. We need this to be able to move the stop, right? We need confirmation that this area is out. Stop comes under that after it cleans. When this clears the area, right, and you flip to the next level, right, this confirms that. Stop goes here. So that's how you handle your stop if you're jumping it yourself, right? If you're trailing it, then you should have some type of setup. And I'm going to talk about that either tonight, probably not tonight, next few days. All right, so I think I blew this already because of the mouse, but here's what I'm going to say. All right, so pop quiz. Walk through, tell me your thought process on the chart. I'm going to put 5 minutes on the clock, but I'm not really going to put 5 minutes on there. What I'll do is you pause the recording when you watch it, and then you come back and answer it. I'll just put like a minute up, right? So here's what I want you to do, man. Do you have the guts? No guts, no glory today. Stop the video, take the quiz, email it to me before you look at the solution. Just do it, man. Come on. Stop busting my chops and not sending me nothing. I'm going to give you the quiz. Pause the video. Take it, attach it to an email, mail it to me at Stevie Beat the Market Maker, and then come back and look at the solution. All right? Come on, man. You can do it. Have some guts. All right? I'm going to be quiet. Go. All right. Let's look at the solution together. All right. If you still have a chance to mail it to me, man. Come on. Before I give you the solution. I'm waiting. All right. Did you do it? Okay, thanks for mailing it. Okay, so look. Coming out of here, right? We have hit the stops for the breakout traders. Directional bias is high side right now. We get a nice push into the high. We get a pin rejection outside the zone. Anytime there's a pin rejection, it means Bookmap or the dealer smash price down, wouldn't allow it to go higher. So I'm going to take this, I'm going to box it in, and I'm going to stretch it out in time. Okay, I'm going to get a failed swing to the high, which means seller might have the book. They closed below here, right? They tried to get price back into the highs. They couldn't do it. If I want to sell this, I'm going to put a limit order in the box. I will not get filled. See, it's late in the day, but I'm not going to get filled. No pins, no nothing. I'm looking to sell half to the back of the box, 2/3 of the box. Stop needs to be outside the box. Okay, no fill. So that's my M now. I got my anchor. Okay, it's not a confirmed anchor until when? When does the anchor get confirmed 100%? The anchor gets confirmed when it takes out the last level that the dealers got spanked that we're trying to sell, right? These are the last places that sellers came in, buyers took it. Okay, I want you to notice too that there's a blue tracer right there. So they're fishing. Where are they fishing? They're fishing for stops and fishing for orders above yesterday's high. Okay, so now you have two pieces to the puzzle. Don't mind these zones are drawn in, they're profile junk, it's irrelevant. The chart is the chart, man. Okay, now I need them to get back inside the range of yesterday. I need to get them back below the blue tracer. They give me that. This bar in one fell swoop comes back in the range and takes out these two levels right here. Takes them out, closes below. Now I got something. It actually, if you look at this line right here, it happens to take out this level too. Now I know I own this structure. This is me. Now I need something. Let me draw a couple of lines on here and try to find out where it's going to retrace into. I got a rejection pin here. I got a pin there. I'm going to take an aggregate. There's a little tiny mark right there. Black is an order block. I'm going to draw a box around here. Okay, it comes back pretty quick, throws a hammer. I either get in with a limit order, my stop is above outside the box. I'm going to go about half to a third of the box, depending on the size of the box. You got to measure it, right? Then I get that push in there and the same thing right below the Mayo. Okay, this is an acceptable entry and this is an acceptable entry. You guys got it? Let me see if I can get a better pen. All right, here we go. So this is a good entry. This is a good entry. They're both highlighted. Okay, I like this one because this bar vectors through. It takes out the Mayo and it turns right back up within 10, 15 minutes. You got something on the books. And you can go right here as an entry or you can go limit order in here. All right, you happen to be rejected by the AR number, the high. This makes a nice little zone right here if you realize that, right? Those two things together and you're heading into the US session, futures contract, it's fine. All right, hooks back, there's another entry. It drops, flat print, this level, right, here we go with the levels. This level confirms this level. This level confirms this level. This level confirms this level. That's a wrap. Okay, look at the time down here, getting late in the day. Noonish, 1300, it's 1 o'clock. You're looking for the door, man. It's bedtime. Okay, so if you got in here or here, you had 45 ticks. But if you waited for the very low of the day to develop, you only picked up a couple more pips. It wasn't worth the wait. So you're better off getting the hits, get out of Dodge, take your points, and call it a day. This time spent to pick up a few more, maybe or may not have gotten it, it's not worth your time, man. Your job is to get in, not get burnt out, work a couple hours in the evening, put something on, then monitor the trade. Trail the stop either by manually jumping it, and it just on MetaTrader, you just drag it down, man. You just drag it down here, drag it down to here, drag it down to here. Simple. All right. I'm looking forward to seeing this in the email, man. Hopefully you guys send it to me. All right. Keep it going. Time at price. Okay. The way these profiles and these levels are developed is from the amount of time that price is held. Consolidation zones, big long consolidation zones, these levels become built, right? Time is spent at a price or a price range in the accumulation process. So if you have like sideways movement, right? Accumulation, that's how a level from profile is formed, right? This would be You would take this wide range swing of 100 pips and you look for where price is tighter. I drew for you last week. You put a POC in there, then you just look for price to break above, tap the book higher, and get out of there. That would give you a consolidation zone or a flat print. It's like I told you, you could take the AR levels and place them on anywhere on the chart that there's consolidation, and you're going to have an AR high, mid, and an AR low, right? Same thing. So you can trade any box consolidation. There was a flat print in GBP yesterday, right? The bars ran sideways, and what'd you get? You got to hit the stops high, broke through, and dropped. It was a nice trade right there. I hope you guys grabbed it. It's the same. It's totally opposite. I showed you one to the long side that worked out, and that was the one to the downside that worked out. Same shit. SSDD, man. SSDD. Over and over again. That's all these guys got. There's a handful of moves that they have to use on you, and if you don't recognize them, you need to get to work. It's a handful of things they can do. I've been talking about it for 12 years, trading it for 23. It's in there. Every single week, there's a handful of moves they can do. As soon as you, I don't know, get your head out of your butt to try to be polite and recognize these patterns and get to work, you're going to start noticing them. Do some algo looping, go through the charts, scroll back. This is the stuff that's going to get you moving. Listen, we're May. The year's half over, man. June 1st, we're 2 weeks away from June 1st. June 1st, it's over. You got 6 months in front of you. And you can forget November, December. They're scratch months. You start from Thanksgiving to Christmas to New Year's, it's over. There's nothing going on. If you have any size family, if you're lonely, okay, you'll have extra work. But if you have a family and you're busy, forget it. You might as well throw in the towel on the minute you eat turkey. It's over. Maybe a few more trading days scrambled in there, but you know how that goes. You have kids or you have a big family and your kids come to visit, you don't even want to be bothered with this stuff. You got to do the work now in the summer. You got to do the work when everybody's at the beach. You got to roll up your sleeves and make it happen so you could be where you need to be by Christmas, going into the new year. You came here for a reason. What is it? What's the reason? Did you find it yet? I know some of you are finding it, and I'm couldn't be excited, but you know how it is. I'm not satisfied. I want everybody to get it. I need you to do something, man. Please. All right? That's my birthday present. Send me something. Okay, or my Christmas present. Send me something. Okay, so look. The dealers hold tight ranges between the high and low before reversing the markets, right? So this is exactly what I'm drawing. They box it in, right? That's where the Asian range comes from. So after you get a big move, right, into the high, they'll go sideways and they'll use the Asian range as a tight consolidation. You could almost, and if you look at GBP from yesterday, you could take the swings off the pins and you can draw a high swing and a low swing, and you could stretch that out. And damn if it almost doesn't line up perfectly with Asia. Go look at it. Okay, so now what? Okay, well, you can almost predict where the Asian range is going to be before the Asian range even prints. So you could take a marker and draw some lines on there and then look for a break high violation to retrace back in. After a big move up, they pull back. After a big move down, they pop up. It's no miracle or mystery. That's how the business works. They can't drop the market forever. They'll go broke. They can't rise the market forever. They'll go broke. So you know this ahead of time. You handle it accordingly. A range is relative, right? It could be 50 or 100 pip swings. Last night it was around 50 pips. But the idea is that when you see a 100 pip swing, you think like, oh man, that's ridiculous. That's the move. Maybe not. Maybe it's just a big swing that starts funneling tighter. Right? And they always give you the appearance of the continuation. That's the stop hunt before the drop or rise. Right? What happens? They give you a tight range. They give here. All right, hold on. Lost the same. I'm having a tough time. Okay, mouse troubles tonight. All right, so look. All right, look. Right? This is what happens. You get a tight range. Get a nice move up, 3 moves to the high, aggressive, 150, 200 pip swing. GBP, crude oil, something amazing, right? Goes up $4. That's 400 ticks, 400 pips, crude oil. Okay, then it goes sideways. Now what? Okay, they're either, if they're going to drop, they're going to break out like this. And everyone's going to go, oh man, it's going up even more. I can't believe it. And then they're going to do a couple of pushes. They're going to flat print, and they're going to come like that. And they're going to catch everybody off guard. And they're going to hit the stops. Whoever stopped it here, whoever didn't, thinking they got it, that's where they're at now. Okay, so the breakout high, you can trade this. If you know it's coming, you can trade the breakout, but you got to remember, maybe a 1R on here, and then this is going to be a 3R or a 2R, back the other way. But you need to have control of this, man. If you get a favorable move, you need to move your stop into +1, trail it in behind the swings, right? Remember this swing, how many times do you want me to say this swing validates that swing, this swing validates that swing? All right? So you can trade counter trend, or you can trade something you know is against the bias. Especially if you're trading like pound yen, pound odd, the bigger move pairs, because the wrong move can give you a nice float, 25, 30 pips easily. But if you're trading what you believe to be counter trend or the wrong directional bias, trade it with a 1R idea, or trade it with a less of an expectation. Go for 25 or 30, tight stop. Don't move your stop and think, oh, it's going to come back, because you're going to find yourself jammed up on something, a big move, or you're going to find yourself in the hole 200 pips with no stop. Then what? Then you're going to try to average out, and those guys are going to take your account from you. All right? Often they give you the appearance of a continuation before the big drop or rise. Normal stuff. How's that created? They pull the liquid out of the book. The book goes dry, turns black, right? They withdraw the liquidity in the book. Nobody home. Price falls like a brick. That's how they do non-farm. I showed you the video. New guys, if you haven't seen it, it's in there, but I love that video. We'll pull it again. I'll make another one. Non-farm payroll, the book turns black. Whoever's stuck trying to get filled, they don't get filled. And that's why you get spanked when you trade that stuff. There is enough opportunity every single day. You don't need some magic, some junk, some news trading, some bullshit program. You don't need that. The opportunity's there. You just got to know how to capitalize on it. And you have to learn. Everybody's looking for a quick fix. Oh, I'll trade the news 3 times a month, make a fortune. No, you won't. You'll trade micro lots until you try real lots, and then you'll get smashed. Or you trade demo, then when you switch to real money, you'll get smashed. The book is empty. You ain't going to get filled. Demo has unlimited liquidity. They fill you at every price point. In reality, they'll slip you 50, 60, 100 pips before they fill you. If they pull all the liquidity out of the book and no one's home, you ain't getting filled. Real money. You'll get filled with micros. Nobody gives a shit about that. It's like a gnat or a nuisance to them. But you ain't going to get filled with any real size, guaranteed. All right, if you haven't seen the video, you need to watch it. All right, quick pop quiz. Talking about POC, point of control and profile construction. Draw in how price forms out the levels. Just think, use your imagination. All right, I'll give you 30 seconds on the clock. Go. All right, what do you get? All right, let's imagine it with me. I know the solution, so it's not fair, but just here, work it in your mind. All right, first of all, you have a clue. That's a moving average right there, right? So that kind of gives you an idea where price is, that you're trading flat, right? So in order to get something that looks like this, right, would have to do this, trade here, right? So if you look at a profile, these are the day tracers, by the way, right? The profile stopped here. So what happens is when there's blank space between the profiles, price drops through, man. So price just falls through, goes back up, and it also drops straight through here, and then it'll consolidate on here, right? In order for this profile to be dominating 3 days, it had to do something crazy aggressive back here and create a lot of volume that it got stretched out into the following weeks. It's a projected area, right? So then you have your little lines here, your tracers. So you might get something that looks like this, right? And then again, it's thin. There's this, imagine this is here, price would hold up right there. Price might hold up right here, right? And again here. And then you're at the edge of the profile, and you're going to get the return back in here. Same stuff going back the other way. Then you might get a 50 bounce type trade coming off of this stuff. That's how these things are formed out. Here's the solution, not a big deal. But right, when there's, if you notice, look, hollow hole in the book, hole in the book, hole in the book, right? Hole in the book. The black space, right? There's your price comes up. Just look at it this way, okay? Like this, flips, punches right through, bounces off there, consolidates a little bit, punches right through, consolidates, drops, punches through, consolidates, punches through, holes on the volume, punches through both of these levels. They're old, they're exhausted, right? These levels got absorbed here. This level got absorbed back here, right? This level's getting absorbed, price punches down, finds the next gradient or the next extension of volume. Bounces off of there, right? Off of these levels. These are previous volume levels, right? These two lines are projected forward volume levels. Sideways print, falls into the neutral space, goes to a line. That's it. That's how the levels are formed out. Okay, so do you need the tool? No. You look at where price is consolidating. I just talked about this. There's consolidation zone right there. Okay, imagine that this is a POC in the center. What's it going to do? It takes out this price, trades higher than that price. This would become your anchor. Price breaks, flips the book, goes higher. This is a trade for the day right here. This could be a baby W. Look, day tracer, Asian range here. You don't need these tools, man. You just need to understand these tools. Okay, here we are. Where's my, there we go. Okay, start of the day, call this Asia, right? Off of the tracer, stop hunt low, W formation, goes up, flips the book. You're long here, railroad tracks take you, high of the day, over. That's it, simple. Okay, you understand that when price is sideways, time and price are the same. It's spending time at this price range. So it's chopping. Chopping gives you an extended point of control, right? What can you do with that? Well, we know that we can take the micro points of control, the micro little things, right? These little flips, we know we can trade those, right? We know we can sell here, we can sell here, right? Sideways consolidation, you box in the top and the bottom, that's a breakout. We know that we sell the little hooks back. That's a perfect entry, refined entry right there. Right? Price consolidated, broke down, tap back, dropped. Tap back, drop big, consolidated, fell out, hit the stops, right? The expectation of a continued short, but became the anchor and reversed midweek, right? Now look at this, Monday, Tuesday, Wednesday, pulled back, and then went back down, right? Midweek reversal happened Tuesday going into Wednesday, anchored high and dropped. Then you got Wednesday, Thursday going into Friday. One more drop, right? How do I know it dropped? Because this volume out to here, right? It fell through, consolidated, created this level, and then fell below that. Open space in the book. Okay, I hope this is helping you guys. I hope you understand it. All right, look, we're at 50 minutes. I think I'm going to end it here, and I'll pick up next week. The goal is for me to get back down to 45, 50 minutes like I used to do and get you guys in and out, and I'll hold you up at night, and just to give you something to chew on for a week until you see me again. All right, so we had some good chart markups. You understand how the profile is developed. You understand the neutral space in the book. You're supposed to be working on something. Send me something. Miss you guys. I want the best for you. See you next week. Get to work.